All right. Good morning, everyone. Do a little pre-market call, and as always, we're going to start with the big picture, and we'll go over some top ideas. Take it from there. Again, so last week we had a crazy kind of end of the week run. We saw the S&P breaking out of this mini base that we've been in for the last month or two. Again, we're still in this broader breakdown stage. We can see kind of in the shorter term this base that's been somewhat starting to form down here. Well, again, broadly still in this bigger breakdown stage. So in the short term, maybe we get a little bit more of a run up into this horizontal downtrend. But given yesterday's actions and the last kind of 3-4 day run up, maybe we need to kind of pull back a little bit and reset given this kind of wide range we're in. We're seeing with energy again still having a tough time breaking this retest area. It continues to kind of push up through, but we're just seeing the sellers are kind of up here. You can see I had the defensive stop kind of highlighted. We had this massive 30% plus run up in a month, and it was kind of time to be more defensive up here than trying to, buy through this retest. So again, energy seems to be kind of in a profit taking area as it finds some sellers up here. Big thing here is again, this 10-year finally breaking this massive uptrend that it's been on. Again, we're drawing out this pattern a few months, maybe not a few months ago, the last month or so of how they looked very similar, had to extend their run up, a little bit of a pullback, and that last little capitulation run. And we saw kind of the same thing here. And now with the 10-year rolling over, this should be a good sign for the stock market in general as interest rates start to come down. And for any of those people that are looking to buy a home, next kind of line of the sand, I'm going to hit some of these lines, is this 3.5 is probably the first area of support the 10-year might find. But if it does break through down through this, then we can see that, just like they say that the stairs on the way up, elevator on the way down. If you can break down through 3.5, we might see us back in the threes. And this is kind of best case, but it's 2.5 area, but that's pretty aggressive. I think right now, keeping on this 3.5 is going to be a key area, especially for those looking to buy a home. Again, just try to be a little bit patient, locking in that rate as the 10-year continues to dip every day. Again, broadly looking at most of these sectors, it just seems like profit taking seems to be the move right now. Again, Dow Jones pushed up through this resistance area, losing some momentum. We saw this with healthcare, kind of same thing. A lot of these major sectors and major markets are running into their major resistance areas. And these are really not the times to press it, kind of the times to be a little more patient and wait for those setups. And everything, a lot of the other sectors are all very much the same. Biotech's running into major resistance. Healthcare, major resistance. Again, if you could be taking profits up here, this would be kind of the ideal area with like a stop versus this low. Again, we were buying 160 in the material sector, less than a month ago, and it's 20 points higher. This is where we want to be looking to take profits from those, better buys up to those base breakouts. Financial, same thing. We were buying this thing 10% ago, up at 80. It's near this major resistance area in the short term. This is where you want to be taking profits up here, not really chasing these long. Same with industrials. Again, we see a lot of these sectors really wake up in this last week or two, which is great action for us to kind of look forward to into the new year. But we don't want to be just chasing it because these runs, as we've seen, they can get negated and reverse themselves entirely a lot more. So you don't want to give back some easy profits when the market's getting close. So again, stock wise, again, this DCP is still setting up here through this 40 short term, more likely to break this 30 to the downside, but eventually it looks very good. Regeneron still kind of battling up here in this 50 area and might need a little bit more time to develop. Other than that, I think just being kind of hands off right now and waiting for your real good setups is probably ideal. Again, we saw this Humana, shaking this bet going on, which was going to go to increase by 20% first, Humana or Exxon. It looks like Shake is still kind of in the lead on that one. But again, it's just that main point of why we want to take profits in these winners when we get them. Because when I got stopped out, I think it was under 590 or 560 underneath this low. I'm very glad to have gotten stopped out versus having given this entire trade back by trying to give this winner some room. So that's my little take on the foreign markets. Evan, if you have any top ideas or member ideas, we can have to go over those now.
Yeah, did you get anything in the mail when you came back?
Nothing yet. Nothing yet.
All right, Shake's got something cooking, I'm sure. But yeah, we do have a couple things on watch today. Actually, we'll go over this question first because Fred's in the chat. So he asked, he has a question for you, Ben. You mentioned VCP or volatility contraction pattern. Are you looking mostly at the chart pattern itself, or the volume, or both?
Just a chart. You can even see I have like probably the most simplest charts. That most people will see. Again, I don't have volume on here, I don't have moving averages. I'm just looking at the chart. Again, looking at volume and those things definitely are very helpful. But for me, just with the kind of day-to-day things of how I trade, I'm much more slower. Like for Humana, again, this Humana trade was as simple as I had this 5-10 buy stop, and once it broke out, of course this thing broke out on great volume, which is amazing, but I didn't have volume up here. I just wanted to buy at that level. So for DCP, again, I'm looking more at the candlestick. If I'm buying through 40 and that day closes, a doji, goes to 40, 50 and comes right back, and there's no follow through like this. Like if it was this equivalent candle, I know it might be hard to see from the screen record, but if that's the close of that day of this breakout, it's like I'm, super tight stop. I'm not trying to keep this thing for too long. Now, if it was a candle like this through 40, bullish engulfing, it's a very clear sign for me just to hold the stock. So I don't want to get, I try to keep my decision making as simple as humanly possible. Whether it's breaking through 40, I want to be involved and I want to see how it closes. I don't want to get into, I want to see a certain amount of volume, and if I don't see it, I'm not going to get it. So I just try to keep it very simple with just buying through that breakout level. And then after the fact, I'm going to see if the volume's there or not based off how the stock closes.
Yeah. Yeah, I mean, I'm kind of the same way. I do look at volume, and ideally for a VCP, you want to see descending volume within that consolidation, and then an expansion of volume when it actually breaks out. So you want to see, people sort of paying less attention to it, quote unquote. And then when it does break out, you see a lot of volume, you have a lot of wind under your sails, and that's what actually ends up working out really well. That if you look at Humana and pull up the volume, you'll see that it actually did exactly that. So it had a decreasing volume for from September to mid-October. And then when we got that breakout through that 505, 510 area, the volume increased. So that's, exactly what you wanted to see, but see, you didn't even need the volume to see that happen. So it helps, but it's not super necessary. Now some setups we're looking at. Kusha is looking at AMAL. That's his first one.
25. Yeah,
25 versus 24. Nice. I mean, top right. Only thing I don't love about it is the average volume, which is a little under 200K. So it's a little thin, but it doesn't mean it's not tradable. Just got to keep that in mind when you are trading. Expect a little bit of slippage and all that kind of stuff. But yeah, this one looks pretty solid. It looks like it's gapping up right to 25 today. A lot of things are gapping up this morning, which can lead people to make some eager trades. So, my advice is to be patient off this open, definitely, and wait for things. I feel like a lot of alerts are going to trigger off the open, and we want to definitely wait and see which ones are actually strong and which ones are going to hold up. We got CELH, which we've been, everybody's been watching this one for a few weeks. It's trade of the week this week. Had earnings last Friday, and it's sort of just been within the earnings day range. Yesterday had some funky action where it did have a strong morning, ended up selling off, and now it's gapping back up, recovering about half of yesterday's candle. So still letting this one set up, but I think in that 95, 97.50 area, it looks pretty solid. Let's see what else we got. Abby was looking at Walmart through 145, but looks like it's long gone with earnings. Plus this PPI report is really pushing it up, and it's actually filling that gap to 147. But definitely still want to keep an eye on. I mean, I think if this one gives us a nice flag over the next couple of weeks, we could have a nice momentum move back to all-time highs. So looks pretty solid. What else we got? Reynaldo's looking at CF through 110. I think we've mentioned this one a couple of times. Yeah, you already had the levels. Yeah.
I mean, I think for this one, I think you just wait for this 112. I don't think you
Yeah.
need to really cheat this by the, $2 to kind of be in this kind of choppy area. Yeah, I think you just really wait for 112.
I agree. Yeah, let it clear that area, especially because like over the last few weeks, you can see those top wicks in that 110 area, and that just tells me like there's sellers sitting there at that 110. So I really don't want to be the guy buying right when the market makers are selling and sending this thing back down and just immediately being in the red. I'd rather wait for it to really prove itself first. But saw a really, really nice chart. Next one, Jesus is looking at ORLY. Flagging after this gap up under 848. So I guess he's looking to buy the 848, 850 area.
I mean, I think you have to give this a little bit more time. Again, we had this drawn out. Someone had to have called this out through the 740. So this was definitely the 740 blue sky breakout definitely was the entry. Again, this is a new earnings flag, new all-time highs, probably does drift higher, but you might have to give this a little bit more time to really develop here through this. It was 850 or 840.
He said it's developing under 848. So I'm assuming he's looking to buy through resistance in that area.
I mean, again, stocks all-time highs, but you just want to remember that it did just have this, 750, just had a 100-point breakout. So you have to just kind of take that into consideration. That is it going to have another 50-point breakout from here through this flag? Possibly, but you just have to remember that it just went 100 points on a massive breakout. So you do want to be a little bit patient, but again, through 850, it's all-time highs. That path of least resistance is going to be higher, but this might need to develop a little bit longer than what he thinks it's going to probably take.
Yeah, it might be range bound for a bit as it continues to consolidate here. I think actually an ideal entry, if you were to look to buy this sort of soon or in the near future, is to try to buy it off of 800 if it comes back down to support. If it does test at 800 and then bounces, I feel like you can trade that range, because I mean it's a $40 range, $40-$50 range. So you have some area to just trade the range versus trying to trade the breakout after $100 breakout. It's a lot harder to trade that breakout versus trading the range and letting it just sort of build that next base. But it did have an inside day yesterday, within Friday's range. So I mean, you could look for a quick trade. I just don't think, like you said, I don't think we see a massive breakout in this one until a couple more weeks of sideways.
Yeah, definitely agree.
I know a lot of people, including Shake, are looking at this MELI, MELI, Mercado Libre today. Double inside day. We got back-to-back inside days, gapping up to right around 1,000 this morning, and that macro trend break right there. So this one looks really solid.
Yeah, it looks very good. Big, yeah, it's great.
It is a little bit. I mean, it's definitely had a pretty big downtrend since early last year, but it's back above the 200-day moving average. All the moving averages are sort of converging right now. So it looks like this could be the spot to start getting in and building a position. What else we got going on here? Tom is looking at PRCT. He just said inside day on PRCT. So I guess he's looking to buy through the break of that inside day.
I mean, chart-wise looks great. I mean, recent IPO, basically as close to IPO highs as possible. The only tough part is this thing is literally went from 38 to 48 in a week. Yeah. So that's kind of even like with O'Reilly. It's like, yeah, chart-wise, it looks great, top right. Again, PRCT for a recent IPO couldn't look better. It's just tough that it's up 20% off its area of support. Where at these IPOs, it's very difficult to join the party up here. You gotta really look at like you're O'Reilly letting it pull in. This is probably not a perfect example. This thing needs to pull in, and you need to find that support buy. Buying this 48 versus 44, you're risking 10%, and you're not going to get 50% out of that trade. So you just gotta wait for a better entry with this, but chart-wise looks phenomenal.
Yeah, I agree. The other one he's looking at is FLNC. F is in Frank.
Oh, FLNC?
Yeah.
No, hard pass.
Yeah, I'm with you there. I only saw in the beginning. I only saw the between August and November. So I just saw that uptrend and then the flag, but yeah, all the way down here, just set an alert for 36, and when that alert pops off, then look for a setup and try to buy through 40 in time. But that'll probably go off in a couple of years. So just wait for that and move on. You could just click X on that one on your watch and not even worry about it.
He probably mentioned this before because we had this line drawn already, so we had to spoke about the same again or in the past, and it's just bottom right. Again, we're talking about recent IPOs. This looks phenomenal. Top right. This took an entire year to get back towards its highs. What was it at? What was it again?
FLNC.
This FLNC, it's been dead for the year. It's been dead down here for the whole year. It's just, this is too much of a battle. No big fund is buying this name. It's just, like Kevin said, just wait, set that alert up here and forget about it till then, because this move through 40 to 80 will be much easier than fighting with it at 15 versus 12 for it to go to 20. It's just not worth the months it's going to take, especially these cheaper names to move. It's not worth that for it.
Yeah, and I mean, that's a great example that you mentioned just from the chart before the PRCT. It's like, it was also a bottom right stock, and it was much easier to just simply let it figure itself out. FLNC. It's a lot easier to just let it figure itself out and then wait till you get a setup like this on PRCT, and then sort of look for a tight consolidation to buy through, and because this one is much more likely to double than say the FLNC in the next year. Next one, AMPX.
This one again, these funky IPOs, not really my cup of tea. Again, I definitely see just like a little flag, little wedge he's looking at. So maybe
he's saying, can we call this a low cheat? Not sure on the setup. He said it looks good though. Recent IPO forming a cup and handle, and today was almost an inside day. But I mean, but you have to keep in mind. I mean, it's $10 name, 280K average volume, so not a ton of volume in this. Could it go? Yeah. I mean, technical wise, I think it looks decent. I mean, I'm not really sure what happened that day one where it went up to, what price is that, 26, and then closed back down at 10.
No, it looked like there was like no volume in this thing.
Yeah, so it looks like it had volume for a little bit, right? So it seems like the average volume is a little skewed because it had one day where it had 15 million out of nowhere. And then it's just sort of died down since then, like a ton. So I don't know.
I think this would be, I would just pass on this. This is not, because it's like you nix this candle, which is kind of BS since they're really nothing, one or a couple of trades like ticked off up here. But I mean, cheap name, recent IPO, no clue what this company does. I would, this is some of these, the FLNC, that one, just, get them off your radar and focus on the PRCT. Those examples, these ones are great. The other two, it's not worth the headache.
Yeah. Val's looking at TMDX.
TMDX. What is it?
TM. M as in money. Yeah.
360?
Didn't give me an exact price. He just says looking better and better. Gapped up on earnings and now just sort of going sideways. I think if it just continues to go sideways a little bit more, it'll look pretty solid.
Yeah, I definitely think this 360 in time definitely looks good, but it just needs, a lot of these are names that once they gap up, they don't, they need some time to kind of settle out before they're going to go on that like next run. So they keep in some alerts in this. Again, it's probably going to tick this 60, today or tomorrow, but I don't think that's going to really be the day that it's going to really, and we look at any of these areas where it breaks out. Very rarely, even if you look at this little consolidation here, it doesn't go this, the second time, third time. It's like it takes a few attempts. So I think we get too antsy when we just see it, and it's like this needs to look more like this before it's going to really go. And that's just, you got to be patient for that. You don't need to, and even if it ticks this and it goes to 62 or 63, it's like you got to still let it develop more and have more attempts at the level to really, have some real follow through. Or you get these little moves here, this little consolidation where it goes a couple bucks and comes right back. So the bigger that consolidation it can have, the bigger the run up is going to be versus it's really tight consolidations where it only gets kind of a one-to-one move of that recent range.
Yeah. Oh, Ben, quick trading view tip of the day. Instead of having to retype the ticker and then adding it to your watch list, you can actually right click on the chart and then just go down, add TMDX to watch list, and then you click it there. Damn, learning something new every day, Ben.
Evan, you got all the secrets to this.
I think that's about it. I mean, on my end, I've got I'm watching. Actually, Ricky mentioned it. Just reminded me to CAR Avis Budget Group. This is like textbook earnings bull flag.
Wow.
I don't know what happened there.
Wow.
That's an insane move.
That is the craziest candle I've ever seen.
But yeah, I mean this earnings flag looks really solid. It had a pretty decent day yesterday. A lot of names pulled back yesterday. This one pulled back less, so a little bit of relative strength there, and then it's gapping up right to yesterday's highs. So I really like this one through like 240. I'm not sure where I'd put my stop just yet. I mean, as of now, it's under 220, 224, which is a little wide. So ideally, this one doesn't go right off the open and just sort of gives me some sort of intraday consolidation that I can put a low of day stop and see if this one works today. I have a small piece from yesterday off the support, but I really want to get a full position today through that 240 area, or if it pulls back.
This is a wild name.
Yeah, I don't know.
But it's in a good way. This is again, this is a really good pattern. This is almost looks like a mini Tesla, like just how this thing trades. So yeah, through that 240, 250, earnings are out of the way. Nice little pennant, a little flag forming. Looks really good.
Yeah. And then Ricky's looking at one more. He's looking at HRMY. We're got an earnings flag around all-time highs, recent IPO, keeping an eye on it for a setup through 60, 61 area, which looks like it's gapped into that level this morning.
Yeah, again, a lot of these recent IPOs, when they get back in near their new 50-week highs, best time to look at these names, through 60, 61. And you're probably going to trade it versus this 55. But again, it's like we said before, you might need to flag it a little bit more. Again, as you zoom in, like you can start to make it look nicer. It looks like it's been consolidating, but when you really zoom out, it hasn't really done much from a consolidation standpoint. But again, if it's going to go through 60 and you can keep that entry tighter, you don't have to give it, the $5 day one, then it might be worth a shot. But I just think this might need a little bit more time to flag out before it's going to really break up to the 60 with some momentum.
Or you look for that retest, look for that resistance turn support retest at 55 area and possibly look to buy it off support and then have a position for that eventual move through that 60. And I think that's about it on my end.
All right, I think the market's going to be open in a few minutes. So Coach Shepard is in the group. Again, if you have real good ideas, let him know and he'll set the alerts for them in the group. And see you guys in the chat.
All right. Later, guys.